Last year was a challenging year, and our results are a reflection of this, although it is important to look at these numbers in the context of two very strong prior years in 2010-11 and 11-12. We believe that Johnson Matthey remains very well positioned to benefit from medium and long-term drivers which will support growth over the years ahead. Taking the year as a whole, we saw continued growth in our Environmental Technologies division, but this was more than offset by a poor performance in precious metal products. Our Fine Chemicals division was broadly flat. This resulted in a 2% reduction in underlying earnings per share in 2012-13. But, as I said, we're confident in the group's growth prospects and are therefore recommending a 4% increase in the total dividend for the year. So, drilling down into the detail of the numbers for each division, Environmental Technologies had a steady year. The Emissions Control Technologies (ECT) business, which produces catalysts for cars, trucks and stationary applications, was affected by the weak auto market in Europe, which held back growth in the light-duty segment. However, our heavy-duty diesel business continued to grow, and overall, ECT's profit was slightly ahead of last year. Sales in our Process Technologies business, which supplies specialty catalysts and process licenses for the energy and chemical industries, were also slightly up, but operating profit was significantly ahead after a good result from Davy Process Technology, which has performed particularly well in China in recent years. Turning to performance in our Precious Metal Products division. Frankly, this was disappointing, particularly in our higher margin services businesses. Here, we were affected by lower average precious metal prices, reduced volumes, and the operational issues which we reported in the first half of our year at our Salt Lake City refinery. We've taken action to address the root causes of these issues and to improve the efficiency of the refinery. The performance of Precious Metal Products manufacturing business, which represents nearly 70% of divisional sales, was broadly similar to last year. On the 15th of February, we announced changes to our contractual relationship with Anglo Platinum, which take effect from the 1st of January 2014. These changes, which will impact the performance of the division from Q4 of 2013-14, signal a change in the depth of our relationship with Anglo Platinum and will result in the loss of commission income of approximately £35 million in a full year. However, it's important to stress that going forward we are confident that we will be able to access PGM required for the manufacture of our products from a broad range of suppliers. The performance in our Fine Chemicals business, which is a global supplier of active pharmaceutical ingredients, or APIs, mostly for controlled drugs, and provides chemicals to academic and industrial research customers, was broadly in line with last year. Its API manufacturing business was impacted by increased competition this year, and we've undertaken a restructuring program to improve its efficiency. This should result in annual cost savings of £5 million a year, starting in the second half of 2013-14. We've had an encouraging start to the year so far and expect to make steady progress. 2013 will be somewhat of a year of transition for Johnson Matthey. Firstly, our new contracts with Anglo Platinum start from the 1st of January 2014, and we're expecting the Precious Metal Products division to make some progress, although this will be from a relatively low base. On the same day, new emissions legislation comes into force in Europe for all new heavy-duty diesel vehicles. Ahead of this, we've seen signs which may suggest some pre-buying of trucks. It's worth noting, however, that this legislation results in an increase in the catalyst value for diesel trucks of around 3 to 4 times, and this will benefit our sales from the final quarter of this financial year. In the short term, Our emissions control technologies business will be influenced by the state of the European economy and its impact on light-duty vehicle sales. Our US business continues to make progress, and in Asia, new heavy-duty diesel emissions legislation starting in China this summer will also support further growth. Our process technologies business is well placed for another year of growth. It will benefit from the acquisition of Formox, a leading global provider of catalysts and process technology for the manufacture of formaldehyde, and the resulting synergies with PT, which provide exciting opportunities for future growth. In our fine chemicals business, we expect continued growth in the US active pharmaceutical ingredient manufacturing business in the current year, and the long-term drivers of the business remain sound. The important message is that Johnson Matthey remains really well positioned to grow over the years ahead. In the medium term, we're expecting growth to accelerate from 2014-15, largely driven by tighter emissions legislation and demand for process technologies products, especially in China. There are strong drivers for our business, and looking further out, we're confident that these will enable us to deliver continued growth, enhanced by our investment in R&D and new business development.